Picture this. You're 40 years old, and instead of rushing to the office every morning, you're sitting on your porch with a cup of coffee, watching the world wake up. No alarm clock, no demanding boss, no corporate meetings that could have been emails. You've achieved what millions dream of but few accomplish: early retirement. And the secret weapon that's paying you nearly $100,000 a year to maintain this lifestyle? A simple three-letter ticker symbol, SCHD. If you've ever wondered how ordinary people are walking away from their careers decades early while living comfortably off dividend income, this story will show you exactly how it's done. Make sure to hit that like button and subscribe for more real-world retirement strategies that actually work. The Schwab U.S. Dividend Equity ETF, known by its ticker SCHD, has become the cornerstone of early retirement portfolios across America. This isn't just another investment fad or get-rich-quick scheme. SCHD represents a methodical approach to building wealth through dividend-paying companies that have proven their ability to generate consistent income over time. The fund tracks the Dow Jones U.S. Dividend 100 Index, which focuses on high-quality companies with strong dividend histories and the financial strength to continue paying shareholders reliably. What makes SCHD particularly attractive for early retirees is its combination of steady dividend payments and potential for long-term growth, creating a reliable income stream that can support a comfortable lifestyle without the need for traditional employment. You can personally check information on the following website for more authentic detail and verify from the official sources. Also, the link of the website you can check in the description box. Thank you. Understanding how someone can generate $97,000 annually from SCHD requires looking at the mathematics of dividend investing. Based on current dividend data, SCHD provides an annual dividend yield of approximately 3.95%. To generate $97,000 in annual dividend income at this yield, an investor would need a portfolio valued at roughly $2.45 million invested in SCHD. While this might seem like an enormous sum, it's important to understand that this wealth wasn't built overnight. Early retirees who achieve this level of financial independence typically spent years, sometimes decades, systematically investing and reinvesting their dividends to reach this point. You can personally check information on the following website for more authentic detail and verify from the official sources. Also, the link of the website you can check in the description box. Thank you. The power of SCHD lies not just in its current dividend yield, but in its track record of dividend growth over time. Since its inception in 2011, SCHD has demonstrated remarkable consistency in both dividend payments and share price appreciation. For investors who purchased SCHD at its inception price of $25 per share, their yield on cost today would be approximately 10.6%, meaning they're earning over 10% annually on their original investment. This illustrates the incredible power of dividend growth investing, where early investors benefit from both the compounding effect of reinvested dividends and the natural increase in dividend payments over time. You can personally check information on the following website for more authentic detail and verify from the official sources. Also, the link of the website you can check in the description box. Thank you. The journey to early retirement through SCHD typically begins with understanding the concept of dividend snowballing. This strategy involves consistently purchasing shares of SCHD and reinvesting all dividend payments back into additional shares. Each dividend payment buys more shares, which in turn generate more dividends, creating a compounding effect that accelerates wealth building over time. The beauty of this approach is its simplicity and automation. Once set up, the process requires minimal intervention while steadily building toward financial independence. Many successful early retirees describe this as setting it and forgetting it, allowing time and compound growth to work their magic. What sets SCHD apart from other dividend-focused investments is its focus on quality companies with sustainable business models. The fund doesn't simply chase the highest dividend yields, which can often be a trap leading to dividend cuts when companies face financial difficulties. Instead, SCHD invests in companies with strong balance sheets, consistent earnings, and a history of increasing their dividend payments over time. This approach provides more stability and predictability in dividend income, which is crucial for early retirees who depend on these payments for their living expenses. The quarterly dividend payment structure of SCHD provides retirees with regular income throughout the year. Recent dividend payments have shown the consistency that makes this ETF attractive for retirement planning. The fund's latest quarterly dividend was approximately 25 cents per share, distributed to shareholders quarterly. For someone with enough shares to generate $97,000 annually, this translates to receiving over $24,000 every 3 months, providing a steady cash flow that can cover living expenses without the stress of market timing or active trading. You can personally check information on the following website for more authentic detail and verify from the official sources. Also, the link of the website you can check in the description box. Thank you. Building a portfolio large enough to generate substantial dividend income requires patience, discipline, and often creative strategies to accelerate wealth accumulation. Many early retirees who achieved financial independence through SCHD didn't rely solely on traditional savings from employment income. They often combined multiple strategies, including side businesses, real estate investments, aggressive savings rates of 50% or more of their income, and strategic tax planning to maximize their ability to purchase dividend-paying assets. The key insight is that reaching financial independence requires treating wealth building as a primary focus, not just something done with leftover money. The psychological benefits of dividend investing cannot be understated for early retirees. Unlike other investment strategies that require selling assets to generate income, dividend investing allows retirees to maintain and potentially grow their principal while living off the income generated by their investments. This provides a sense of security and permanence that's particularly valuable for those who have left traditional employment. Knowing that companies are directly depositing money into your account every quarter, regardless of stock price fluctuations, creates a level of financial confidence that supports the early retirement lifestyle. However, it's crucial to understand that achieving $97,000 in annual dividend income from SCHD isn't a guarantee and requires significant initial capital. The path to this level of financial independence typically involves years of aggressive saving, strategic investing, and often some degree of lifestyle optimization to maximize savings rates. Additionally, dividend payments can fluctuate based on company performance and economic conditions, though SCHD's focus on quality companies helps minimize this risk compared to higher yield but less stable alternatives. The tax implications of dividend income also play a crucial role in retirement planning with SCHD. Qualified dividends from SCHD are typically taxed at favorable capital gains rates rather than ordinary income rates, which can result in significant tax savings for retirees. This tax efficiency makes dividend income particularly attractive compared to other forms of retirement income that might be taxed as ordinary income. Understanding and optimizing for these tax advantages can significantly impact the after-tax income available to support retirement lifestyle goals. For those inspired by the possibility of early retirement through dividend investing, the journey typically begins with education and gradual implementation. Starting with smaller, regular investments in SCHD while learning about dividend investing principles can provide hands-on experience with the strategy. Many successful early retirees recommend beginning this journey as early as possible, as time is the most powerful factor in building substantial dividend income through compound growth. The story of retiring early on SCHD dividends represents more than just financial strategy. It's about designing a life aligned with personal values and priorities. While not everyone will achieve the exact scenario of $97,000 in annual dividend income, the principles of dividend investing through quality funds like SCHD offer a proven path toward greater financial independence and the freedom to make life choices based on desire rather than financial necessity. The key is starting with realistic expectations, consistent action, and a long-term perspective that allows compound growth to work its magic over time.